Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. Okay, so just to remind you, I have said repeatedly in this commentary for months and months that the most interesting or significant feature of this market has been the very significant lows of 2021 at 15,665, which led to lows of late November 23, plus the lows in 24, most recently in late October, November and early December, and I suppose also the congestion in January and February this year. So I will now reprise my commentary, the same commentary I've given here for many months now, and I quote, "It is this point I feel obliged once again to mention the big descending scallop pattern. It's been going on about for months and months, and what it may mean within the near-term universe." So the key level had been the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below this could give a downside potential for the descending scallop pattern down in the 13,830 zone. End of quote. Last week I added, and I quote, "For a while I even started thinking this pattern's time had come and gone and maybe I should retire it completely, but I didn't." Well, for you, we definitely had, as I said, a significant move, one that you would recognize when you saw it, and prices dropped down like a stone down to the 13,830 zone, with a low at 13,865 yesterday. All in all, it is satisfying to see such a move down to a target I've been prattling on about for many months, and to do it in a way that I suspected it might. As for what's next, well, we have just reached the end of a huge move, and I think I will require some more thought and observation to see what will be next. End of quote. So my observations a week onwards are these. The levels of 15,840 and especially the low of 2021 at 15,665 are still key, as we have seen today with 15,665 with just above it the flatlining gold, the mauve medium moving average, currently 15,710, and the green short medium moving average, currently 15,720. Above these we have the dark blue July 24 to November 25 head and shoulders neckline, currently at 15,960, and the long moving average, currently 16,110. Meanwhile, below we have the 50% Fibonacci line for 2025 at 15,325, which is seemingly acting as a base of action for today, along with the newly drawn bright red middle time, currently at 15,205, of the early October 24 to mid-March 25 bearish shift pitchfork. This middle time is not validated yet, but the lower time, currently at 13,925, halted the fall last week on the closing basis, and arguably also partially on the low basis, along with the October 2020 low at 14,040. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns that have affected the market in recent times, all happening all at the same time. First is the thoroughly broken, but even now still refusing to die, old dark blue May to August 23 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, 24 bull channel, especially the upper and middle tines. This one would not die, even when I thought last week it had been finally expired, as I kept it on my daily chart just for a couple of weeks, just in case. And as is the situation today and all this week, plus late last week, the lower tine, currently at 26.24, is acting as a base of support, along with a March 21 low at 26.27 and possibly the newly drawn bright green middle tine, currently at 26.14 of the mid-December 24 to mid-March 25 bearish Andrews pitchfork. The decline 3 weeks ago was prompted by the break lower below the neckline, currently at 28.68, the early January to early March this year reverse head and shoulders continuation pattern. So what else have we to look for now? Well, further down we have the lows in early August last year at 25.49, 25.59 and 25.63, as well as the important 2021 low at 25.47 that prompted those lows in August in the first place. However, I would like to draw your attention to another feature, one I highlighted last week, and I quote, "The March 20 to date uptrend below, currently at 24.85, highlighted in purple on my daily chart. I'm not sure how good this would be as it's been finessed a number of times, but it is still nevertheless there and ought not to be ignored." End of quote. Well, meanwhile, top side, I'd look to the 50% Fibonacci line for the whole March to April move at 27.55. Now, this is not the whole of 2025, just the major move in the last few weeks, as well as the declining short medium moving average, currently 28.31, and the medium moving average currently at 28.96. The latter having formed last week a dead cross. The latter two having formed a dead cross with the declining long move. Sorry, the latter one having formed a dead cross with the declining long moving average currently at 29.06. Plus, of course, the bright green upper time currently at 28.51 overhead. LME 3-month tin. An extraordinary significant move, one that technical analysis worked on quite well. So, as in some of the other metals I've discussed, there are a number of patterns affecting this market. And prices did indeed halt on the Monday last week at the dark blue lower time, currently at 31,900, of the November 23 to November 24 bullish shift pitch wall, bouncing up for a day, but last Wednesday plummeting down further, down to the July 2011 high at 29,005, which is the recent low. On the way down, it passed through the nearby gold long moving average, currently at 31,450, and the mauve medium moving average, currently 31,360, closing below both for 2 consecutive sessions before turning back up again. Now, prices did also breach, but did not close below congestion between 29,880 to 30,205, as well as the bright red neckline extension, currently 29,810, of the October 23 to January 24 reverse head and shoulders bottom. However, the move up is now capped this time by those same mauve, medium and gold long moving averages, plus the dark blue lower time and a new resistance that really didn't show itself before the 50% Fibonacci line of the March 20 to March 22 move at 31,845. Above all these, we have the purple neckline, currently at 32,415 of the April 24 head and shoulders continuation pattern. Yes, that one. That one. The tall, thin one. With above that, the short medium moving average, currently at 33,025. The neckline also, the August to November 24 head and shoulders pattern, currently at 33,505. Then one of the previous all-time highs at back in April 2011 at 33,605, until we reach the 50% Fibonacci line of this big April 25 move down at 33,660. Do I think it might reach back up that far? Well, right now I have my doubts, especially if I had eroded some of the downside last week. But this 50% Fibonacci line is right now a key level on the top side. However, now I keep an eye on the dark blue breach lower time below, in case the market tries and runs along the try and run along the underside of it. And also keep a watchful eye on the congestion below, between 29,880 to 30,205. One final thing, I've been tempted to draw either a new bullish Andrews or shift pitch wall for the late November 24 to mid-April action. So far I have not succumbed, but I will be considering it, especially if we start approaching that 50% overhead Fibonacci line at 33,660. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.